got some huge news for Qualcomm stock investors, and the stock price was up more than 20% at one point. As of this recording, it's up about 12.5%. And of course, I'm happy about that. I've been rating Qualcomm stock as a buy for some time now, certainly for all of 2025 and for most of 2024. I had Qualcomm stock rated as a buy. So I'm happy to see the stock price gaining as my viewers have been following this company, and I know many of you purchased based on my initial recommendation, and then you did your own due diligence and found that this indeed was an undervalued semiconductor stock you can add to your portfolio. So in this video, I'm going to review these latest developments, what it could mean for Qualcomm stock investors, and whether or not I still think the stock is a buy even after this 13% share price increase.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the reason why Qualcomm stock price soared is because the company is diving into the data center market with the launch of its new AI 200 and AI 250 chips that are rack scale offerings. This move puts Qualcomm into direct competition with NVIDIA and AMD. Of course, NVIDIA boasts roughly 90% market share in this industry. AMD is a much smaller player, but AMD is growing quickly to gain market share that NVIDIA dominates. And of course, I've been talking about how new companies are undoubtedly going to enter this industry because I've been talking about how NVIDIA's revenue growth is soaring and NVIDIA's gross profit margins are approaching 75%. Anytime you have an industry where you're generating this kind of revenue growth and this kind of profitability, it's going to attract competition because they're looking at this and saying, oh my goodness, this is so lucrative. We want a piece of this action. We'll take a chance. We'll take a risk to invest in R&D to create a product that may or may not be successful in this industry because the upside is so massive that we can take this chance. We want to participate. And if at the very least, we'll at least chip away at the lead of companies like NVIDIA and AMD and give us an opportunity to penetrate this market, even if not completely, but maybe partly penetrate this market that's expected to increase from roughly 255 billion in spending in 2025 all the way up towards 1.5 trillion in spending by 2035. The expectations of this industry are huge. Enterprises and hyperscalers like Microsoft, Amazon, Alphabet are pouring hundreds of billions of dollars into expanding their data centers optimized for AI, and that's the opportunity that Qualcomm aims to capitalize. Now, these chips will be available beginning in 2026, which is a lot earlier than I expected for a new product to enter into this category for a company like Qualcomm. But Qualcomm, if you've noticed my covering of the company over these last year and a half or so, or 5 or 6 quarters, I've been highlighting how good Qualcomm's management team has been in entering new markets and expanding outside of an industry that they dominate, which is the smartphone industry. That's a category that Qualcomm dominates. The large majority of its revenue comes from smartphone categories, but it's been expanding into new categories like personal computers, where it's making great advancements, and into automotive technology, where it's also making great advancements. Revenue growth from those two categories has been very solid for Qualcomm, and now it's entering into the data center market optimized for AI. So I think investors can be reasonably confident that Qualcomm can be relatively successful in this category, especially for that reason I've been highlighting why I gave AMD a great opportunity in this category. Remember, to start 2025, I ranked AMD as one of the best stocks to buy this year, and that recommendation has played out extremely well as AMD's share price has soared and AMD continues to secure large deals in this data center opportunity. And the major reason why I said they would is because the buyers of this technology, which I highlighted earlier, those large hyperscalers, they don't want to be dependent on NVIDIA. They don't like this large dependence on NVIDIA. I mentioned 90% market share. That makes them very uncomfortable. Depending on one company for that kind of critical technology, that really makes these large hyperscalers uncomfortable. And it gives NVIDIA really strong negotiating power against those hyperscalers because NVIDIA can say, take it or leave it. Where are you going to get this technology? There is no one else that can provide you with what we're providing you and bringing you the value that we're bringing you. And so I've been talking about how these hyperscalers are going to give other companies a chance. They're going to take a chance on NVIDIA. They're going to give AMD. They're going to give AMD these deals. And they're going to say, AMD, we're going to give you some rope. We'll be lenient. And we don't expect you to be perfect in the first few quarters and probably not even the first 2 years. But we're going to give you some rope. We're going to give you some time to develop and become an alternative to NVIDIA. If for the only reason so that we can tell NVIDIA, if you don't give us favorable terms, we'll go to AMD. Just to have that threat against NVIDIA is worth it for these large hyperscalers to give AMD a deal and give them a chance. And for the same reason, Qualcomm will get a chance because AMD hasn't done enough to become that alternative. Not yet. Maybe they will, just not yet. So the hyperscalers, in my opinion, will give Qualcomm some rope. They'll give Qualcomm some deals, and those deals will be a few $1 billion because this market is so huge that even a small deal turns into a few $1 billion because these hyperscalers, for instance, Amazon is forecast to spend $105 billion in capital expenditures in 2025 and likely much more in 2026. Meta Platforms is forecast to spend roughly $70 billion in capital expenditures in 2025 and has signaled that they'll spend a lot more in 2026. Microsoft, Alphabet, similar numbers with similar growth expected next year. So I think it's prudent for Qualcomm, if they had the capability, to invest in the R&D to bring forth this product, even though one hesitation that investors should have with Qualcomm is they've tried this in the past. So this isn't Qualcomm's first run at the data center market. In 2017, the company announced it was building the Qualcomm-centric 2400 platform with Microsoft, but the venture quickly fell apart due to tough competition from Intel and AMD and broader corporate issues, including a range of lawsuits eating into the company's focus. And so they've tried this before unsuccessfully. And so that should temper your optimism here for Qualcomm's successfulness in this category. But that was a different time when the market was not growing as rapidly, when the market was not dependent on one supplier. And so at the very least, I think investors can expect Qualcomm to capture a few $1 billion here of this market opportunity for that primary reason, to lessen the dependence on NVIDIA. And I'm not even thinking about the effectiveness of this technology from Qualcomm. If it happens to be really effective at lowering the total cost of ownership for a certain category, that's all upside from there. But at the very least, they're going to capture some market share for the primary factor to lessen the dependence on NVIDIA. So investors are now probably thinking, is Qualcomm stock still a buy after this big share price increase? And I still think this stock is undervalued. The current market price is $189. The intrinsic value is $216. And I have yet to incorporate this news into my discounted cash flow valuation. So undoubtedly, this news will lead to an increase in my expected free cash flow forecast for Qualcomm over these next several years. And so when I incorporate that into my discounted cash flow valuation, it's likely to create an increase in the intrinsic value per share of at least a few percent, I'm thinking. Okay. So this news is very new. I haven't had time to incorporate, rather than rush to incorporate the news into my discounted cash flow model. I usually take some time to do some research and incorporate over time as I see new data points and estimates and more details on the scope of this announcement. Still, even at the current market price, the stock looks like a attractive value, and I will reiterate my buy rating for Qualcomm stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.